Let's talk about Discovery. This one we own in the Hot Stocks portfolio. It's a financial services company that began in 1992. So this is a young company. And it started as a medical aid administrator, but it's now also an insurer and an asset manager operating in Africa, the UK, USA, and China.
In fact, that life business has really been its winning business, and at the heart of it, it has the technology to improve returns there because of the way that the Vitality program works.
Market cap 96.3 billion rand, a price to earnings ratio of 24.6 and a dividend yield here of 1.2%. There is the share price graph. Wayne, let's get your thoughts.
Okay. Discovery is very different. Very successful in South Africa. They've got all the new products coming out. They're going to go into banking, but South Africa is effectively ex-growth. That's why many, many years ago, they decided we are going overseas. And they've been into America twice now. The first time wasn't particularly successful. They've gone into China massively. They're in the UK, and they have been very, very good at these global acquisitions and expansion. It's still in the early stages, and especially the Ping An in China. It's still in the bottom, in the curly bit of the hockey stick, you know. So you think it will pay off at a later stage, but the last number you said there speaks volumes. Dividend yield of 1.2%. They are using their capital for expansion, and they've done a few rights issues. They spend capital. They don't create capital yet.
Trading update out.
Yes, they like to draw attention to normalized headline earnings per share, and that is only up like sort of 6, 7, 8%. So what they said in the statement is that they're taking a little bit of strain in the UK business in particular, where, you know, the mood is
Brexit
a bit iffy and so on and so forth.
Uncertainty prevails.
And remember, they swooped in and bought out the minorities in that operation and rebranded it Vitality. So now they're giving it a full go. But, you know, I still think that the technology is the differentiator here. But look, I'm not alone. That's what everybody thinks. That's why it's on the market valuation that it is.
Yeah, and look, they clearly have got world-leading technology, and that's what they're exporting. But at some stage, they're going to have to move into a cash conversion phase where they actually make positive cash flows.
So how long do you think the market will give them?
No, look, the market's going to give them a long time because they have proven themselves. But, you know, within the next 5 years, they're going to have to generate some cash.
The relationships with insurers like AIA in the Eastern Bloc area, like Generali in Europe, like John Hancock in the US, are ones where they benefit from the reductions in or the improvements in profitability within those firms. They're not deals where they have to put in capital. So those should be quite strongly beneficial soon. The problem is that
in terms of being cash generative.
Yes, the Chinese thing is like a full-on health insurer that they're busy building there, a medical aid type business. So that could suck up a lot of capital. And then the old UK is sort of bumbling along, and South Africa remains positive, but potentially a little bit more mature.
But Wayne says ex-growth.
Look, I mean, they'll still do well in South Africa, but it's not a boom story. You know, they can do well by introducing new products, and they certainly have got, you know, they've got a very loyal client base. So it's effectively selling more product to a relatively static client base. So the only way you can grow is via that, and then stealing clients from other people because the pie is not growing.
What about the threat to the medical aid business here? Because
with the NHI, and it's coming back into
this is a global story.
Personally, I think that whole NHI thing is just a lot of rubbish.
Look, that's a lot of hot air. But I mean, understand, there's pressure on the system. There's pressure on the system worldwide to cut costs in the provision of medical. Whether it's NHI, and so there's just pressure across the system, single exit pricing, and of course the medical schemes are heavily involved in this, and it's not, as I said, it's not a growth industry. You know, I don't think there'll be NHI. I agree with Paul. NHI, I think, is going to be used as an excuse to cut medical aid tax deductions next year. But whether it ever pitches or not, who knows?
Well, let's call it hot on Discovery. Hot at current valuation.
We own this one, lots of this one, and lots for clients. So I'm very happy that, notwithstanding a rather muted trading update, the share price is trading at an all-time high around 150 rand. So I'm going to stick with it. Stick with hot.
I'm glad we have that consistency of your thought process.